Progress. Recording in progress.
Good morning. Hello, everyone. Good morning. Welcome back. Here for session 5. We'll be covering financial management and fundraising today with our facilitator, Dr. Palmer, and also Tracy Carriette here with the center. Did want to go ahead and remind you all that we do have our Spanish interpreters here with us, Eda and Pablo from Sensole. Did either of you want to give a quick reminder about anything? I know we need to make sure that we click our preferred language down below.
Hola a todos, bienvenidos a nuestra quinta sesión. Hoy vamos a estar hablando de gestión financiera y recaudación de fondos con la doctora Palmer y con Tracy Carriette del Centro para Organizaciones sin fines de lucro de Carolina del Norte. Queremos nada más recordarles de por favor escoger su canal de interpretación. Si quieren participar en español, van al canal de español. Welcome everybody. Just a quick reminder for the interpretation to please pick your language channel. If you want to participate in English, then you will go to the English channel. Les vamos a recordar a las presentadoras que por favor hablen a un ritmo moderado, especialmente si están leyendo. Si yo o Pablo, que es mi cointérprete, necesitamos que hablen un poquito más despacio, les vamos a poner un mensaje en el chat. A reminder to presenters to please speak at a moderate pace, especially if you are reading. And if for any chance, Pablo or I need you to slow down just so that we can make sure to transmit the whole message, we will drop a message in the chat. Cualquier cosa nos dejan saber. If there's any issues with interpretation, please let us know. Gracias. Thank you.
And please also be sure to put your EN, SP, or BI next to your name so we know your preferences there. Great. Thank you so much, Ada and Pablo. We're glad to have you with us. Let's go ahead and pivot to give a quick thank you to our sponsors and partners. I believe Jean was in and on and off, so I may turn this over to you, Lisa.
Why don't you go ahead, Lisa, because my internet is very unstable. I'm gonna mute, and I don't know what happened here this morning, but
that's fine.
Yep, go ahead.
I had been talking and realized I was on mute. So let me say repeat. Welcome everyone. Again, we're almost to the finish line. Our plane is still going this way and slowly descending. So we're on our 5th session for fundraising and financial management. And again, we just want to give a quick shout out to all of our sponsors that you see in front of you. Without them, this would not be possible. So as we move along today, hopefully you've got some brain nourishment food. Full agenda again today. As you can see, we'll provide a brief overview of our last session. Won't spend too much time on it before we head into our financial management and fundraising section. We'll have a guest with us today from the North Carolina Center for Nonprofits, Tracy Carriette, who is our Chief Financial Officer, who will be giving you lots of good information on financial management and some good pointers. So with that, without further ado, I'm going to turn it over to Dr. Palmer.
Good morning, everyone. It's good to be here, and hopefully we have all had, I won't tell you how many cups of coffee I've had, but as I always begin, hopefully you've had your choice, either breakfast or tea, coffee, to get you going this morning. We do have, as usual, we have a full agenda. Today, we are focusing on financial management and fundraising. We do want to take a minute, however, to just do a little bit of thinking back to our previous session as we were working on strategic planning. But before I go there, I do want to just point out, as with all of the topics that we cover, you know, we identify these areas as being fundamental areas of managing nonprofit organizations. And we are focusing on 6 of those fundamental management functions. And as Lisa mentioned, we are probably more than in the home stretch right now. We are, once we finish today, we have one more, and graduation will be next week. And of course, you're in for a treat for our virtual graduation. You'll get more details about that later on. As I mentioned before, we do just want to just take a minute to hone in on one aspect or a aspect of strategic planning. And if we could go to the gallery, well, let's go ahead and pull up the review and reflection. We can go to the next slide. So you should have received information from us in our wraparound, just as we do each week. And in terms of just a little bit of a review and reflection, we're going to talk about the SWOT analysis. If you could go to the program goal example that we provided and the nonprofit goal example. Now, these 2 documents were put in the chat for you. These are not in your workbook. So if you could reference that, that would be great. I think that's all I want to say about that at this point. So if we could go to the gallery view, and if I could just get a little bit of feedback in terms of kind of where you are with understanding the SWOT analysis. So I'm jumping right in this morning because we've got quite a bit of work to do. But the SWOT analysis, if I could just kind of give a little bit of a description and narrative of that. The SWOT analysis is what we typically use and facilitate when we're looking at each goal that you've identified in the strategic plan. So you've identified, thank you, Logan. You've identified the goal. And then what we do is we determine what are our strengths related to achieving the goal? What are our weaknesses that might be present as it relates to trying to achieve this goal? What threats might there be or barriers might there be in trying to accomplish this goal? And then are there any opportunities, either anticipated or unanticipated opportunities that we see? Now, the anticipated opportunities, we can document those in the plan. The unanticipated opportunities, however, we may not know those until they we are presented with them, or something happens and we become aware that, hey, as a result of trying to achieve this goal, we have an opportunity here. And that is the same with outcomes. Some outcomes are obviously anticipated, and we worked on those last week too. But then there's some outcomes that we don't anticipate, and we want to document unanticipated outcomes. And we also want to document unanticipated opportunities as you're monitoring and tracking the implementation of your plan. So again, as it relates to the SWOT analysis, are there any questions about the SWOT analysis? Or do you have any just kind of comments that might be helpful as we think about that? And once we have a little bit of conversation around that, Rebecca is going to highlight for us another concept that we talked a little bit about it last week, but we want to kind of lean in on the way in which we craft our goals and so on and so forth. So any thoughts about the SWOT analysis? Also, I'm referencing our results from the capacity assessment that we did. One of the areas of focus or of interest for the group was implementing an action plan to guide the day-to-day operations. That was one. Of course, the SWOT was another, and then having a schedule for periodically reviewing the work that we're doing in implementing our strategic plan. I think we're good. I think.
Yep, nothing in the chat, so you're good.
Okay.
So far.
Does everyone have the sample program goal and the sample nonprofit goal? I want to make sure that everyone has that, team. Those were two resources that we put in the chat last week. Does everyone have?
I think we had one request, if we
Okay.
could pop those in the chat.
Okay.
From someone who wasn't here last week.
And so, and let me tell you why well, I think it may be somewhat obvious, but we made sure that in your workbook, you do have an example of a goal with a set of action steps and also an outcome statement. So you have a goal statement, action steps, outcome statement. But we also, over, I don't know, gosh, how many years have we been doing this now? Anyway, over the course of the time that we've been facilitating training around strategic planning, many of our participants would ask for a specific goal related to programs. So like, how would I craft a goal? So that's why we have that example. And then we would always oftentimes have the question, well, what's the difference between a program goal and a kind of organizational goal? And so that's why we provide those two examples and give you a template that you can use over and over again to craft goals and so on and so forth. So just to kind of give you a little bit of a explanation as to why we do that. Rebecca, I'm going to pass it over to you to talk about SMART-T and SMARTer goals.
Great. So quick raise of hands if you've heard of SMART goals before, and keep your hand up. Let's see what we got. Okay, good. That's good. Okay, keep your hand up if you've heard of SMART-T goals with the IE added. If you haven't, feel free to lower it. Good. Okay, I'm seeing a couple of hands still up. How about SMARTer goals with an ER at the end? Quite as many hands. Okay. Well, we just wanted to cover our bases here by giving you some examples of each. Obviously, for SMART goals, specific, measurable, attainable, ambitious, you'll see both of those interchangeable, relevant, and time-bound. And then in order to bring in an EDI perspective, we also have inclusive and equitable added as SMART-T goals here. In terms of inclusive goals, the question we want to ask is, does this goal invite traditionally excluded individuals to make decisions and contribute in a way that shares power? And when we're talking about equitable goals, we want to ask, does this goal include an element of fairness or justice that seeks to address systemic injustice, inequity, or oppression? And I was going to ask, can someone read our examples here of an equity forward approach to goal setting? You'll see SMART goal and a SMART-T goal. Does someone want to unmute and read those off for us?
Happy to.
Thanks, Scott.
Yeah, so in the case of the SMART goal without the equity forward approach, it simply says expand youth membership program into 3 new counties by the end of June. Whereas the SMARTY goal, which includes the time-bound, inclusive, equitable goal, adds the verbiage with volunteer task forces that are representative of the community by age, gender, race, and other characteristics, advising the expansion.
Thank you, Scott. You can see there, Smarty goal gives us a richer goal. It gives us a lot more to work with. So we encourage you all to consider how you can add the IE to your SMART goals. And before we move on to smarter goals, I see a hand raised. Reginald, did you have a question, or was that just from our inventory? Oh, I think it went down. Okay. All right. Let's move on to smarter goals. All right, so for smarter goals, we have the same setup here with goal setting and alignment under SMART. And then we have a tracking piece here, E for evaluate and R for recognize and reward. So we're also looking at how we're baking into the goal, how we're going to both evaluate it and also recognize and reward. It's important to celebrate our wins, big and small, right? We don't want to just keep working and working and working and never pause and celebrate a goal that we've reached, or celebrate a milestone or an objective that we've been able to attain. So it's really important that we recognize fellow staff, board members. Let's say the board has a goal to raise a certain amount of money. Yes, I like that, Ao. I think we can make it up, right? We can make up whatever goals we want, but it just gives you a sense of some other ideas that we might have, ways that we can incorporate different elements and build upon this SMART goal logic. Any questions about that? I'm going to go ahead and put a, this is a guide from Culture AMP that is a guide to setting and tracking goals that we like to share at this part. So I'll go ahead and pop that in the chat. Any questions before we move on? Any examples of having SMART or SMART-T goals or smarter goals?
I know this is Io Wilson. I was being a little funny when I put that in the chat, but
no, I think it's great.
I was really curious about the smarter goals. I know there's not a equity and inclusion point in here. So I was wondering if it is possible to have that in the smarter goals that would kind of make it, you know, all the more complete, you know.
Mm-hmm. Yeah, I mean, it's up to each of us to sort of adjust and shift and help bring folks along at our organization and in our community. Be thinking about these more broad concepts when we're developing goals.
And also to Aya's question, just to, I guess, to be clear, the SMART-T goal, it in the framework of it, you know, including that equitable element of it is definitely a sign of the times, if I could say it that way, as it relates to kind of where a lot of our organizations are. Even businesses and government entities are honing in on EDI and DEI as it relates to that. And if I'm recalling correctly, I do believe Smarter, that framework came before Smarty. And so Smarty is the more recent iteration of writing SMART goals that we found in our research. But Smarter came prior to Smarty. So we've evolved a little bit, just to kind of point that out to Io's comment.
Perfect. Thank you, Dr. Palmer.
Mm-hmm. I see there's a hand up.
Buenos días. Doctora
A
Palmer,
good day.
thank you. Doctora Palmer, ¿podría, por favor, darnos un ejemplo un poco más específico sobre cómo diferenciamos una de la otra? Ambas son específicas, son ambiciosas, tienen un periodo de tiempo y se evalúan en cómo diferencio una de otra. Gracias.
In the previous slide, team, if you would go back to the previous slide, there is an example. So there's an example there. So there's your SMART goal, and then there's your SMART T goal. Do you see that, Paulo? I want to make
Pero
sure.
ambos tienen los mismos requisitos, es decir, son medibles, tienen un periodo de tiempo, porque lo que yo veo aquí es como que uno es más general y el otro es como mucho más específico.
Right. So the SMART goal, if I could speak of it in terms of development of the framework, the SMART framework, SMART, was the first level. SMART-T is the second level. So that's why you see a distinction there. And then let me go back, smarter, then SMART-T. That's really the way in which we see the framework evolving in the research. And so that's why you see more elements and more pieces to the framework, or more parts to the framework in the SMART-T framework. So think about it in terms of, we didn't know that we wanted to include inclusive and equitable when the SMART framework was introduced. Then we shifted and we moved into utilizing SMARTer, and we landed on SMART-T. And so that's just kind of the way in which the research has informed us. So it does get more specific. Does that make sense? Okay.
Sí, gracias.
Let's see, Aura. Aura has a.
Gracias.
Hi, thank you. I understand the difference between the SMART and the SMART-T. The smarter, it seems that is incorporating a next step of the evaluation and the recognition. Is that something that you're saying should be built into the actual goal, so that you are literally spelling out how you will evaluate and how you will recognize within the development of the initial goal? Or is that something that you think about later and say, okay, we've done this goal, now let's think about how to evaluate and recognize it?
It could be either. Keep in mind, and I think Rebecca kind of inserted this in her description, as an organization, you can decide how you want to frame the way in which you write your goals. A really good practice is that it minimally utilizes the SMART framework. When you get into evaluation and recognition and reward, those are supporting elements of implementing the goal and incorporating the goal in the plan. It's always, I think, a better approach. The more you can provide in the development of the goal. So if you're going to include, if we could go to that, go to the smarter slide. If you're going to include evaluation and recognize and reward, that's a part of tracking. So if you look at the framework, the SMART pieces, SMART, are really in terms of crafting and writing that goal. And when you get to evaluate, recognize, and reward, we look at those elements of goal achievement as we are tracking and monitoring. I think it might be a little crowded in crafting the goal to incorporate the recognize and reward. However, I do think when we write SMART goals, the evaluation element of that goal is inferred oftentimes if it's not real specific. So always just kind of keep in mind that it is at the discretion of your nonprofit as to how you actually want to craft it. SMART is baseline. The other pieces is what we found in our research. Rebecca, I don't know if you wanted to comment about, I see what some comments in the chat too, but.
Yeah, I'll go ahead and pop the inclusive and equitable definitions into the chat. So you can see those. Those are just in our notes section, but it'll be helpful when you're framing the inclusive and equitable aspects of your goals. But I'm glad to see that for some of you, this is sort of lit a fire to go ahead and start incorporating these and thinking a little bit more broadly about how we're developing goals, how we're tracking them, who we're bringing to the table as we move forward. So thank you.
Mm-hmm. I think Jenny has her hand up. And if we could go to the gallery view, that'd be great.
Hola, sí. Ok. ¿Sí me escuchan? Sí se
Yes.
escucha. Gracias. Bueno, solo para que si me queda claro, nosotros estamos en un proceso en nuestra organización que es en realidad es una colaborativa. Creamos nuestros SMART Goals en nuestro plan de trabajo anual. Los mencionamos. Luego creamos un tablero de desarrollo organizativo en donde ponemos nuestros SMART Goals que incluyen esta cuestión de que son inclusivos y que son equitativos, más amplia. La información la ponemos más amplia. Y ahorita estamos en el proceso de pasar a los Smarter Goals, porque estamos creando el proceso de evaluación y recompensa. Todavía estamos ahí, estamos creando cuál va a ser esa herramienta que nos va a permitir evaluar cada SMART Goal. Entonces ahora, si yo entiendo, se va a convertir en Smarter Goal. ¿Es así?
I wouldn't necessarily say that. What I will say is that you have 3 iterations of a framework for developing SMART goals. And in terms of the evolution of the framework in the literature, in our research, SMART came first, then SMARTer, then SMARTee. That's what we were able to see in the literature. That's the development of it. I wouldn't necessarily operationalize it like Jenny just described it. I think the operationalizing of the framework is at your discretion in terms of how you want to craft your goals, what you want to include in them. I hope that's answering the question. We're not prescribing to you specifically how you go about doing this for your organization, but what we are saying is that it is a good practice to begin fundamentally with a SMART goal.
Gracias.
And then Antoinette, did you have your hand up? See hand up in the chat.
I did. We made a goal to within our organization to actively try to uproot systems of oppression within our framework. And we've tried to really apply that in each of our programmatic goals as well. And, part of the recognition and the challenge we had as an organization is that we wanted to recognize where if we had created harm in communities, if we had, taken programs into communities that weren't really reflective of their needs. And we had some pushback a little bit. When I see the recognition part, I just wanted to ask how you perceive the idea because we actually put out there on our website where we had not achieved our goals in relationship to, you know, equity and inclusion. And then for the next step for us is uprooting systems of oppression. So have you all seen that? And how do you perceive that as far as like good best practice within nonprofits for communicating that recognition may not always be rah, rah, yay, we did it right. Do you have some really good ideas around like just helping us think through that? Because we really went back and forth and maybe lost a couple board members because they didn't want to be associated with us admitting that we just messed up just when it came down to it.
So this is what I would say, and team, please chime in at any point. I'll in terms of thinking about including elements of diversity, equity, inclusion, or EDI, or DEI, you know, it depends on who you're talking to, how you arrange those letters. I would say that, you know, you do have to take into consideration the culture of your organization, your board, your community, et cetera, in terms of how you might approach recognition, acknowledgement, et cetera. I think that we don't have a recipe for that. We just like in your scenario, Antoinette, some of these things we become aware of as we try to proceed and to engage, you know, our leadership and our boards and our staff in work that, one, we decide that we're going to focus on these areas, but two, we're going to monitor and track how well we do, and we're going to communicate when we don't make the mark or when we miss the mark. So we don't have a particular way as it relates to how you recognize or how you identify, and we all have lost board members when it comes to this wave or this season that we're in as it relates to EDI or DEI. So no, I don't have, unless my team members have some examples that they want to share of what I would call tried and true strategies at this point. DEI and EDI framed this way is fairly new. And we are learning kind of as we go, because we've not necessarily worked in this fashion up until recently. And I would say COVID really brought a lot of attention to DEI and EDI. The North Carolina Center for Nonprofits has had this as a principle for probably over a decade. However, we've gotten some momentum now, and organizations are starting to operationalize strategies to lift this up and acknowledge when we don't make the mark. Antoinette, are you still in Davidson County?
Good old Lexington.
So
our hometown.
Right. So I grew up in Lexington, y'all, and I'm from Davidson. I grew up in Davidson County. When SMART started, and I think we got some partnership agencies on the line, several years ago, probably the late 90s, I'm going to say maybe early 2000s. I want to say late 90s. I was the evaluator for Davidson County Smart Start. And one of the goals that was in the plan that the county received funding for was around, I think one of the values was around something related to equity or related to diversity and so on. And in that county, that particular partnership office, the leadership at the time, when I highlighted and pulled out the goals in the plan and outlined the outcomes and the goals that were written by the body and showed that we hadn't really done a whole lot related to that particular area, we didn't want to report it. And we didn't want to necessarily, we got a little bit of pushback. So it sounds like you're still working on that in Davidson County. Now you might go in another area, another community, and it's a little bit more well received. So that's kind of how I'll leave that. I mean, every community is different. You know, folks are at different levels of readiness when it comes to possibly crafting your goals where you have an element of being inclusive and being equitable. Team, I know I got to move on, but does anyone else have a comment? And Antoinette, does that help at all?
That does. We are Women Advancing statewide, and actually we got more pushback from people in progressive areas that didn't want to be seen as that. So just so you know, but we can talk about that offline. So
no worries. Okay. All right. Thanks. I just had a flashback of being the program evaluator for Smart Start back then. So yeah. Rebecca, Lisa, I think we're good.
I think you're good. Yep.
Yeah.
Okay, thank
Good
you.
discussion.
Good. Yeah.
All right, thank you, everyone. So if we could go back to the gallery, if you don't mind, just real quick. So now we're going to transition from strategic planning to financial management. And again, today we have two fundamental areas of management that we're going to focus on. It is, like I said, financial management and fundraising. And we also have a guest with us today that we're going to introduce to you in just a few moments. But before we go into the content related to financial management, I do want to turn your attention in your workbook, just real quick. I want to show you kind of what we're going to be referencing. Go to page 103, and you're going to see 4 different sections there. And there are 4 different links. As we move into these areas, we're going to put the links in the chat, but I just want you to know that we're going to be referencing this information online, and we're also going to be showing it on the screen. So I just want to kind of get you teed up for that. And I will say, if while we're working on this part of our work today, you step away and come back, you may find yourself a little lost because we're going to be working through these pieces. So when we kind of get to this part of it, just know that we're going to be putting links in the chat. We're going to be showing information on the screen. We're going to be doing quite a bit of kind of using different mechanisms to get this information to you and to work through our financial management topic today. So I just want to kind of get you ready for that. We will put these links in the chat, but I just want you to know when we get to these pieces of information, how we're going to manage that and how we're going to work with you through this. Also notice for financial management, there are 3 documents in your workbook. So that tells you quite a bit is going to be showing up on the screen, and we're going to be connecting and linking you to information. So try to stay with us when we're covering that information. Try to stay with us as it relates to that. So give me, before we go into financial management, if you would use your reaction feature, give me a sense of kind of how you're feeling. How are you feeling this morning? We've got two really good topics. We've got a wealth of information to share. You're going to be doing some hands-on work. Stephanie, is it Stephania or is it Stephanie?
it's Stephania.
Stephania, thank you. Thank you for, and Marlies, is it Marlies? Marlies, okay, thank you. All right, okay, sunglasses, I like that. Got a thumbs up, check mark, okay. All right, Lisa, I think we're ready to rock and roll. So the way we're going to kick off our financial management topic is we're going to kick that off with a breakout session. And what we want you to do is we want you to review or take a look at this image. And team, we can go back to the image now. And I also think we're going to put this link in the chat. I want to just give a shout out to the YWCA of High Point. This information is on their website, but we want to start off with where we want to land or where we want to end up. When we think about financial management, it's important for us to kind of think about it from the perspective of working towards diversifying our revenue stream with our nonprofit. You know, we want to diversify our revenue stream. We want to look at it from the perspective of having multiple streams of dollars coming into our organization. And we know that this is a challenging goal. We know that it is very challenging to get to this place. And so we're going to put you into breakout spaces, and we want you to discuss this question. And the question is, how does this image represent a nonprofit with a diversified revenue stream? How does this image represent a nonprofit with a diversified revenue stream? And I'm going to repeat that question again. How does this image represent a nonprofit with a diversified revenue stream? And we have the question in the chat for you. And so we're going to place you into breakouts. And team, once we go into our breakout session and we come back and report out, we're going to take a break at that point. So your breakout is going to be about 7 to 10 minutes. And Rebecca, I'm going to pass it on to you.
Okay. All right, we'll go ahead and open up the rooms. If you end up here in the main room and you'd like to be in one of the breakout rooms that are where English is predominant, just let me know and I can pop you in there, but hopefully we got them correct. And we'll see you back here in about 7 to 10 minutes.
I think we are returning back from our breakouts. Looks like we're all back. We do just want to kind of get a sense of what your discussion was. Rebecca, I don't know if Jenny's hand raised was as a part of her breakout, or is it a part of, oh, okay. All right, I see. All right. So we just want to get a sense of just kind of what your discussion, what came up in your discussion about what you saw here. And if we could show the image, that would be great while we have this discussion.
Pues en nuestro grupo llegamos a la conclusión de que una organización como... ¿Continúo? Gracias. Como el YMCA tiene muchas formas de diversificar sus ingresos. De hecho, según lo que entendemos, depende poco de las fundaciones y más de otro tipo de ingresos. Tiene 8 o 9 formas de tener ingresos de manera diferente. Pero también hablábamos un poco de los retos que enfrentamos organizaciones pequeñas como las nuestras, que ofrecemos ya sea servicios directos a la comunidad de inmigrantes latinos o a las comunidades de base, o que ofrecemos en nuestro caso, en el caso de Enlace Latino, información. Entonces, es para todos nosotros un reto tratar de diversificar nuestros ingresos porque estamos tratando apenas de asegurar ingresos que nos permitan sostenibilidad. Y poníamos un ejemplo, por ejemplo, en el caso nuestro de Enlace, mientras una organización de noticias sin fines de lucro que ofrece información en inglés a la comunidad blanca recibe un grant de $800,000, nosotros tenemos que aplicar a 15 grants de 60,000. Eso implica tiempo y dinero. Entonces no tenemos el tiempo y el dinero para pagarle a alguien bien pagado, porque ese es el otro problema en las organizaciones sin fines de lucro que ofrecen servicios a los latinos. No sé cómo serán las demás. Normalmente la gente le paga muy mal. Entonces, y por eso tenemos tanta rotación de personal en las organizaciones. ¿Y cómo podemos diversificar ingresos cuando estamos enfocados en sobrevivir? Entonces hablábamos de eso y también una compañera hablaba sobre cómo podemos medir otras cosas que no están relacionadas con el dinero, como el tiempo de los voluntarios, como el trabajo de voluntarios, cómo esto puede estar incluido dentro de un reporte financiero.
And what I will say is agreed. I agree. So here is where we are. What we are sharing in this image is the destination, right? So this is where we want to try to achieve this diversification of revenue. So I'll just kind of leave it at that, and then we're going to talk about some ways to get there. But that's where we're trying to land. We're trying to work our way there. And let's not make the assumption that if our organization is 100 years old, that organization is any closer to where we're trying to land, because that's not necessarily true. And the other thing I will say is that, what is the master plan then? What is the strategy? Has your nonprofit established how are we going to get to this diversification of revenue and work towards that? Is it easy? No. Does it take a while? Yes. However, what we're encouraging all of us to do is to work to get there. And so agreed with everything that you shared. Aura?
Hi, yes, our group, I think, ended up with more questions than answers, but I think overall the pie chart is a great exercise to visually tell you whether or not your organization is diverse as far as funding stream. But the one question that came up is, okay, they've got two sources that account for 56% of their income. So the question is, how much of the costs of the organization go into that 56%? Is it a worthwhile exercise to put a lot of cost into, for example, programming, if it's only 26% of your stream? So that we need to see what is their profit loss and how much are they putting in to get that 26% of revenue stream.
Agreed. And here's where we want it to be, is to begin to kind of think about these questions, right? And to begin thinking about this picture and how did you get here? And is this really the image that you want to achieve? You pointed out two sources make up about 50 to 60% of where the revenue is coming from, right? And so is that wise? Is that where we want to be? Is that a good strategy for us? Every organization is different. Andre.
Yeah, so a lot of what we talked about, and I'll actually defer to Leslie Covington to speak on her point. But for starters, this is all relative, right? You can look at an image and look at what seems to be a diverse funding stream or revenue model for one organization, and that same pie chart would be to the detriment of another organization. So it really depends on the organization's model, what you're looking to do, all of those things. Also just want to clarify, because this happens and all the time, there's a big difference between the YWCA and the YMCA. And I've heard it kind of used interchangeably a couple of times. I can tell you, if you look on that, 1% membership, 1% of their revenue coming from membership at the YWCA, that would close down a YMCA. So just want to make sure that we're on the same page about what organizations we're talking about here. But yeah, it's diversity of revenue stream is relative, very much relative to the organization. And then Leslie made a good point about the correlation between that pie chart and the revenue standpoint and expenses. But I'll let Leslie, not to put you on the spot, but I'll let you speak to that, because you can use your own words better than I can.
It was basically, we were just talking about how the money was used that we see in the pie chart, and how, as great as it is to see the income, the expenses are just as important. So if 29% of that is brought in through program, the question is, how much of that going out might be for outreach purposes? So we can't assume that we even know how the income is being used when you're looking at that kind of a pie chart. It's simply to tell you how it's coming in. And so something else you might want to know when you see that from an organization is, okay, I see how you got it. How are you using it? So that's it. It was that simple.
Agreed. Thank you. Thank you. Any other groups that want to report out or share or give us your thoughts in terms of kind of where you landed in your discussion? So this is our launch pad for going in and talking about financial management. Every organization is different. The way in which your nonprofit thinks about money and how it's used and how you steward dollars is all going to be very, very different. The one thing that I want to make sure, though, that we keep in mind is that while we're managing our finances, we should also be thinking about fundraising, because fundraising gives us those unrestricted dollars, so to speak, which helps us to be able to do more work as it relates to our mission and vision without stipulations, right? Without some guidelines or rules that we have to follow. So while we are writing grants and securing dollars through earned income, like membership fees and program fees and all of those things, we are also simultaneously fundraising. And so our financial management strategies and our fundraising strategies should be working in tandem to get us to this place of diversifying where our dollars are coming from, so we can do more of the work that we desire as an organization based on need. Because sometimes when we're locked into a grant or we're locked into a contract, we're not able to respond to needs like we want to. And so we as a nonprofit organization, what is your way in which you manage finances? What kinds of dollars are you trying to secure? What type of approach are you taking as it relates to how you get monies in the door? And someone pointed out how you expend those dollars. So it is bigger, right, than this image in terms of operationalizing financial management and fundraising in your organization. It takes time, folks. It takes time. And if you are a standalone nonprofit organization and you are not since we're talking about YMCAs and YWCAs, and by the way, that always comes up. We're seeing YW, but we're saying YM, or we're seeing YM and we're saying YW. Happens all the time. I just happen to have a liking to both. So in my community, but we really want to be what we're really trying to spark with each of you as it relates to your nonprofit is, what is your overarching strategy? Like, what is your strategy? And where are you trying to land? And when we have a strategy, it doesn't help us as much when we're inconsistent in implementing the strategy. And oftentimes what I find with our nonprofit organizations is we'll develop a strategy and we'll take off and we're doing really, really good. And then we get down the road and we kind of backpedal a little bit in terms of being consistent in the strategy so that we can get the results that we need. We're looking at the YWCA of High Point. This is on their website. They've got all their financials on their website, as do many of your nonprofits. So we're looking at this example here. It took the YWCA time to get to this place in 2018. If you had looked at their financials, if you go back and look at their, I think they're on there for several years. If you go back and look at some of those earlier years, they had to work to get to the image that you see here. And so it is important to recognize that it does take time to get there. And but I appreciate all of your feedback. I don't disagree with any of the feedback that you shared. The takeaway, though, from this conversation and your review of this image is, what is your strategy? What is your nonprofit strategy? And if you don't have one, how can you begin to develop one? And we're going to get into some more details about that. We're going to take a break here. And when we come back, we're going to focus on financial management from the perspective of reviewing financial documents, understanding some of the kind of fundamentals of managing the finances of a nonprofit. Our task today is not, because we've got several organizations in this space, we don't necessarily tell you how to create necessarily your overarching strategy, but we give you the tools that you can use to create that strategy, if that makes sense. And so when we get back, we're gonna kind of buckle, what do you call it? Buckle up, buckle in, put your seatbelt on. And our Chief Financial Officer of the North Carolina Center for Nonprofits is gonna join me in walking us through some of the fundamental elements of managing the finances of a nonprofit. And again, be sure to reference page. There's going to be several links. We're going to give you page 103. Those are the 4 areas that we're going to focus on within the next hour. And so let's take a break, team. And it's 10:38. So let's come back at, let's do a 10-minute. That gives everybody plenty of time. So let's come back at, well, it's 10:30 now. So let's come back at 10:49. A break. Hopefully you were able to at least take 2 or 3 minutes of that break to do something mindless. Again, we're going to move into our first of 2 topics today, which is financial management. And I'm going to pass it over to Lisa.
Yes, welcome back, everyone. I'm not on mute, right? You can hear me. Okay, great. So yes, I'd like to quickly introduce Tracy Carriette with the North Carolina Center for Nonprofits. Tracy's responsible for our overall financial operations at the center, as well as audit and tax functions, budgeting, policies and procedures, and human resources. She does it all. She began working at the center as an intern while attending Meredith College, where she received a BA Mathematics with a minor in accounting. Tracy's a veteran of the center. She has more than 15 plus years of experience in nonprofit accounting and human resource management. Previously, she worked as a staff accountant with a CPA firm specializing in nonprofit accounting and financial consulting. She currently serves on the not-for-profit committee of the North Carolina Association of CPAs. So welcome, Tracy, and thank you.
Good morning, everyone.
Good morning, Tracy. Good to see you. As we think about financial management, we're going to focus on 3 areas: financial transactions, internal controls and audit, and diversification of revenue. And if we could go on to the next slide, that would be great. So again, we are going to work on and focus on financial transactions, internal controls and audit, and diversification of revenue. And notice diversification of revenue is our 3rd point and last point around this topic, but that was where we started with our just kind of review and study of the information that we shared with you. Again, please be sure in English, pages 102 through 104, in Spanish, pages 103 to 105. And we're going to be, as I said before, sharing some links on the screen and in the chat that are listed by section in your workbook. And so we're going to kind of utilize those links to kind of walk us through what it is that we're doing today. If I could go to the next slide. So financial transactions. We're going to pick up at duties and responsibilities. Each nonprofit has its own guidelines and policies. Oftentimes you see those in your bylaws in terms of the board of directors role and how finances are to be handled. And then some of our nonprofits have separate policies and procedures around procurement and how we manage and facilitate the different tasks, coordinate the different tasks needing to be completed as it relates to our work in the space of financial management. Again, we're talking about revenue and expenses. Many of our nonprofit organizations go through a budgeting process each and every year. As mentioned earlier, some of our nonprofits may not necessarily have all of these mechanisms in place, but the goal here is to present this to you as a way to begin to create that financial management infrastructure that you need from an administrative standpoint. So we're going to go to financial transactions. And if you look in your workbook, let me get over here, you're going to see on page 103, financial statements. This is where we are going to start. And I'm going to just kind of let Tracy share with us as it relates to the North Carolina Center for Nonprofits, just kind of in essence how financial management works. And then she'll go right into explaining how we read each of these different reports. Tracy?
Yeah, thanks, Dr. Palmer. I think it's really just iterating what Dr. Palmer has already shared with you all this morning, that there's a strategy and a foundation here that you want to try and have. It's still going to be very different for each organization, depending on the makeup and the size of your organization. The guidelines and policies are the things that help guide you into creating this strategy. They clarify the roles, the authority, the responsibilities for these essential financial management activities and decisions. So as Dr. Palmer said, are we going to go ahead and jump into the actual statements? Yeah. So team, you all can pull up. I think we're going to start with our statement of financial position. And while they're pulling that up, I'll just go ahead and share that the reports we're going to look at today are all going to come from an organization's audited financial statements. As staff and or board members, you should receive similar statements on a regular basis within your nonprofit for both reporting to the board and monitoring things internally. We're going to stay, or we're going to be looking at Big Brothers and Big Sisters of Massachusetts Bay. Again, just as an example, so we can have something on the screen that we can go through and talk about each of these with you all. So the first one that you have here is the statement of financial position. It's also referred to as the balance sheet. This statement is going to show assets, which is what you own, OWN, liabilities, which is what you owe, and your net assets, which is the equity. And on this statement, all of those categories will be arranged by the order of liquidity. This statement provides a snapshot of the financial health of the organization. You can also see just by looking at the asset section, and it's the same with the liabilities, and we'll scroll down to that in just a minute, that current, when they talk about current assets versus other assets, they're talking about within the next 12 months is what they mean by, by current. So you'll see distinguishment between those with both assets and liabilities. Some examples of assets are your cash. Those are your bank accounts that you have. Grants receivable, those are awards that are owed or expected to the organization. You also might have prepaid expenses. And an example of that would be if your organization pays health insurance premiums for your employees. Usually that is invoiced a month in advance, so it's a prepaid expense. And then you might have property and equipment. And then if we could scroll down to the bottom part of this, or this is, sometimes you'll see it on the same page, other times you'll see it on two different pages, but if you could go ahead and scroll to the assets part. Yes, so this is, we're still looking at the statement of financial position here. This is just the liabilities and net assets part. Examples of liabilities are accounts payable. So those are invoices that you owe. Lease obligations, that could be the office space that you rent, or if you have equipment like a copier, oftentimes that's done on a lease. So those things would be listed here. Deferred revenue, that's money that is collected for a service or a program that's happening in the future. So you would defer it into another year. Then you'll have current or long-term liabilities such as a loan. If any of you got the PPP loans from a couple of years ago, you might have had those show up in this part of your statement of financial position as a loan. Net assets, so that's what would be left if you sold all your assets that we just talked about, and then you paid all your debts and liabilities. That's what's left over. So your net assets are your total assets minus your total liabilities. And you can see on this example that net assets are split into without donor restrictions and with donor restrictions. So an example of with donor restrictions is if you get a grant that's for a particular program or event, that would be restricted revenue. So it would show up under with donor restrictions. Without donor restrictions is talking, as Dr. Palmer mentioned, that general operating support that hopefully we're getting, that can be really used for any part of the work that the nonprofit organization is doing. So this report really defines the assets that you have available to conduct operations within your organization. Things that you want to look at on this statement in particular are the receivables. So the amount of money that's outside your organization that's owed to you, comparison of assets to liabilities, and any big changes that might have occurred from year to year. So you can see here, this is for 2019 fiscal year, but they're also going to show you the previous fiscal year of 2018 for comparative purposes. So questions on the statement, I think there was one in the chat that I can look at. Elaine, would donor restrictions also include time-bound grants? Yes, grants can be restricted by purpose or by time. Usually if it's by time, it might be if it was like a multi-year grant. So over more than 1 year, you would find a time restriction on that.
I don't see any other questions. If there aren't any, we're going to move to the next statement in terms of review. The other thing to keep in mind, many of our nonprofits are using a financial management software to help to generate these reports. Tracy, I'm going to pass it on to you.
Sure.
Back to you, rather.
Yeah, thanks for that, Dr. Palmer. So a lot of organizations will use a financial management or accounting software. For example, the center uses QuickBooks. I think a lot of nonprofits do. And so again, this was where I was referencing the statements that we're looking at today in particular are traditionally going to be seen in an audit. But if you're using an accounting system, you can also generate reports that are very similar to this. So when I talk about wanting to do this regular throughout the year, whether it's monthly or quarterly, for staff's internal tracking as well as for reporting to your board, your accounting system can help generate these for you for any period of time throughout your fiscal year. So that definitely helps to be able to have that and produce these reports yourself on a regular basis. If you want to scroll to our next statement. Thank you. So this statement we're going to look at is called the Statement of Activities. This is also referred to as a profit and loss or income statement. The purpose of the Statement of Activities is to provide detailed information about the organization's transactions and how those activities help further the organization's mission through various initiatives and programs. So this statement is going to show revenue and expense over time. Essentially, we're looking at the cash that's coming in and the cash that is going out. It will categorize the nonprofit's revenue and expense. And these revenue line items are going to tie closely to your budget. And we haven't talked about that budget yet, but you'll see a lot of the same types of revenues here that you would see in your budget. The expenses are also going to tie back to the budget, but here in this audited financial report, they're going to be broken down by service area. So whether it's program or support services. And so if you'll just scroll down just a little bit, we can show them here what we're talking about. Oh yeah, sorry, there you go. So you'll see program services and then general administration and fundraising and development. It also, again, you're going to see revenue separated into with or without donor restrictions. And as we just talked about, that restricted revenue means that it's used for a specific purpose or program. And this is going to allow you to see the flexibility in funding. So the change in net assets that you see at the bottom of this statement is just telling you your expenses subtracted from your revenue, and it shows you if you have enough revenue to cover your expenses. So there's a question about what are examples of costs for fundraising and development. Is that like a commission paid to a fundraiser? Yes, that is an example. So if you have a contract fundraiser, that would be an expense that would get allocated to fundraising and development. Good question. Any other questions on this statement? Or Dr. Palmer, as always, feel free to chime in as we're moving through.
If there are no questions, Tracy, you can continue on to the next statement.
All right. Okay, team. So I think we will scroll through because I don't see any hands raised or anything else in the chat. So this next statement is the statement of functional expense, and it's kind of picking up a little bit on the statement of activities that we were just talking about. But it focuses on the expenses of the organization. So when we talk about them being program services versus general admin or fundraising, this is what we mean. So you can see the columns here in this sample. So a statement of functional expense is going to show the functional classification of your expense. As I mentioned, it's broken down by program services and support services. Line items, again, align with the budget and tie back to that statement of activities we were just discussing. So your program services are going to include expenses incurred to meet the mission of the organization through the programs and services directly or indirectly. So an example of this would be if you have an annual event, that's going to be a program service. It's something that you're doing in relation to the mission of your organization, and you will have direct expenses related to that are going to show up here under program services. And then the support services, which is the general and administrative, that's often referred to as operating or overhead expenses, and then fundraising and development. We already talked about an example of fundraising expenses. When it comes to the indirect expenses or the general and administrative, there might be expenses that you have that can be allocated across the programs of your organization. And so there's different ways that you can do that. And one example might be like the executive director's salary, right? They work on every program and every aspect of the organization. So you can distribute that person's salary across all of these areas. And there are different ways that you can do calculations to allocate expenses like that. It really does depend on your organization. What you want to make sure that you're doing is ensuring that it's a reasonable methodology for your organization. So for example, one way to do that is by percentage of time. So at the center, we'll look at the makeup of our staff and how they spend their time in different program and general administrative areas. And if there's an expense we need to allocate, we can do it based on that overall percentage, if that makes sense. The functional expense is a report that is included in the Form 990, which is the organization's tax return. So since they have to do it for that, a lot of organizations go ahead and include it in their audit each year, so that funders and the general public, whoever might be looking at this, can see how they're spending those funds. So in the beginning, when we talked about diversification of revenue, you all also picked up very quickly about, well, we need to understand how it's being spent. And so this is one way to be able to show that. Any questions on this statement? All right, we can scroll to the next one. Oh, I see a hand. I don't want to miss. Paola, is that how you pronounce your name? I'm sorry. Feel free to unmute.
Gracias. Una pregunta. Cuando vemos in-kind expenses, ¿a qué nos referimos? Gracias.
So an example of in-kind expense would be when somebody donates a product or service to the organization, you would record that actually as both an in-kind expense and a revenue. So let me see if I can give you a more specific example. The center has a managed IT provider, a consultant that helps us with technology. Well, they provide those services to the center for free. So we need to understand the value of those services. So what would we normally pay them if we were paying for that service? And we would record it. You record it though as a revenue and expense. You're just seeing it here because this particular report focuses on expenses. And so it's just to help give that full picture of the expenses of the organization. So you're including things that you would normally have to pay for if somebody wasn't giving it to you for free. And so it's called an in-kind expense. Aura?
Hi, thanks. Yeah, I have another question about that in-kind expense. I understand about the revenue. We've got 3 co-founders who basically spend 20 to 40 hours a week volunteer time. What kind of expense would the organization report out, because everything is on volunteer and the expenses are basically taken in by those volunteers? So no expense literally to the organization.
Yeah, so the way that you think about it, though, is if you were paying those volunteers to do that work, what's the value of what you would be paying them? So either they have a standard hourly rate that they might charge to someone, or if they're not set up that way and sort of like a consultant, then the IRS has a standard volunteer rate that you can use to calculate the value of that. And so again, it's just thinking about what would that expense cost you if somebody weren't volunteering or giving it to you for free. And you don't have to record. There is a little bit of guidance on in-kind expense in terms of the type of service or consultation that is being provided. So you don't have to record everything. Like, think about your board members' volunteer time. But then if it's like the professional service of like the managed IT example that I gave you, that's something that you'd probably want to get the value of and record. Hopefully that answers both of your questions.
May I add something? Yeah. So I think one of the values also to record those type of expenses is, as you said, so if for some reason there is not a person to provide that service for free as a volunteer, you may have to pay for it. So if you have it in your budget, so you know that at some point that income is not going to be there and that you have to raise it. So you have a way to how I say, to budget it.
Yeah. Absolutely. That's a really great point. You may get a service for free one year, and that may not be the case the next year. Yeah. And so understanding the value of that helps you budget for the future.
And Tracy, can I add to that as well, if you don't mind?
Absolutely.
And I'd love to get your opinion on this as well. In the past years, when I worked for another nonprofit, I managed federal grants. And some of the federal grants will ask you for matching funds. So where another place where in-kind contributions are really helpful to track in terms of monetary amount, because if you have a grant for $20,000, let's just for example, and the federal grant wants you to match it, where they want you to know that the agency's bringing in funds and they will accept volunteer, or they will accept in-kind donations as a monetary match. That way you don't have to have cash, but if you can show the in-kind funds that you're bringing in, that volunteer work, you've got $20,000 of volunteer hours or in-kind hours put in there, you can use that as your match instead of showing cash dollars. So that's another advantage of using match. And Tracy, I didn't know if you wanted to add to that at all. Or
no, I think that's a really great point, Lisa. And actually, I think the group again touched on that when we were talking about diversification of revenue, is that it's also other types of resources and not just all the cash that you're bringing in.
Also, I see several questions in the chat, and we're going to have to time these, everyone.
Yeah.
So team, if you could capture those questions, we may have to circle back, but I do think there's the one about the calculation. Tracy, if you could go ahead and do that. And then team, if we could begin to generate, I'm not sure how we can do this, but generate a list of the questions so that we don't lose cadence with our time.
Yeah. So I think the question you're referring to is, do we have resources for calculating executive director allocations? So that's where I was talking about it being find a reasonable methodology for your organization. So again, we look at the programs that the center has and how our overall staff is spending time in those areas. Some organizations will also look at their office space, for example. I've heard of this, and what percentage of their office space is used by staff who are working in particular areas. And so those are examples of methods that can get you to a fraction or a percentage that you can then use to calculate other allocations of expenses. And it's a little complicated and we can get into a lot of details. So that's a very brief answer in the interest of time. And to Dr. Palmer's point, I'll make sure I follow up with our team so we can answer any other questions that you all have.
And Tracy, you can go ahead to the next statement.
Okay. Yep. So if we can scroll, I believe we're going to look at the statement. This is just the previous year's functional expense. So again, it's just for comparison purposes. So team, you can keep scrolling. Okay, so the last statement is the statement of cash flow. This statement provides data regarding all cash flows received from operations and from investments. So it's going to summarize the movement of cash that comes in and goes out of the organization. So it's where the money comes from and how it's being spent. Like the other statements, this one has a year-over-year comparison. This is broken down into the type of activities. So operating activities would include cash from operating programs and services. The investing activities are going to be purchases or sales of assets or loans made or received. And then financing activities is going to include cash from financing, leases, credit cards, those sorts of things. And then at the end of the statement, you'll be able to see the change in cash throughout the course of the year. If you are doing this within your organization internally, you might have a spreadsheet where you're tracking the revenue that came in for that month and the expenses that were paid so that you can see the net effect between the two. And that can be a really good tracking tool to use. Anything about the statement of cash flows? I think that gets us through all our sample audited financial statements. So Dr. Palmer, I'm going to turn it back over to you to move us forward.
All right, great. So in terms of what comes next, so we mentioned budgeting and we're going to circle back to that, but we begin thinking about managing our finances by creating a budget every year. And in that budget, you have your revenue, anticipated revenue, and you also have your expenses. And then as you move forward through the course of that fiscal FISCAL year, you're generating these reports and you are putting information into that data system. Tracy mentioned QuickBooks as the system or the software that the center uses, and many of our nonprofits use QuickBooks. Some love it, some don't, some think it's quirky, some think it's whatever, but that is the most commonly used software, and it can be expensive too, by the way. Make a note too, team, there's a source that gives us a discount as nonprofit. I think it's called TechSoup.
TechSoup.
Yeah. So we'll share that with you all as well, because it can be really, really expensive to utilize that software. So we budget, right? We look at revenue and expenses. We do that every year based on the fiscal year, FISCAL. And some fiscal years are January to December, some are October to September, some are July 1 to June. I mean, it varies depending upon your nonprofit. Your nonprofit organization would have determined your fiscal year when you completed the 1023 application to become a 501c3. When you complete that application to become a tax exempt organization, you inform the IRS as to what your fiscal year is going to be in terms of time frame. So that's just kind of a FYI for those of you who don't or didn't know that. So we're going to look at 3 more pieces of information that require us to take some action or to perform some tasks. All of the financial statements that we review, these are financial statements that are commonly shared and reported on at board meetings to keep our board of directors informed of what we're doing. But we're going to look at 3 different pieces of information, or I should say tasks, that we have to create and generate information for. One, the IRS, which is our 990 that we are expected to complete and submit each fiscal year. Also an annual report. We're going to highlight an example of that. And the audit and auditor's report, the statements we shared is in a report. It's in an audit report. And so we'll talk about that. And so we're going to do a highlight of the 990 form. We're going to populate it here on the screen. You should have a link to that in the chat, as well as having the link in your workbook. And Tracy, I'm going to turn it back over to you.
Yeah. So what you see on the screen is called the Form 990, and we also just popped it in the chat for you all to pull up. This is the nonprofit organization's tax return document. The Form 990 is filed annually with the IRS, and usually it's due the 15th day of the 5th month after the close of your fiscal year. So, for example, if your fiscal year ends on June 30, your 990 would be due on November 15th. That's the 5th month after the end of your fiscal year and the 15th day. So that will vary depending on your fiscal year, as what just Dr. Palmer just referred to. There are different iterations of the Form 990. There's the standard form, which is the one you're looking at now. There's a Form 990EZ or a 990N, which is a postcard. And which form your organization completes depends on the amount of gross receipts your organization has. One thing I want to point out about the 990 is that back in 2019, there was a mandate that required the 990 to be filed electronically through an authorized IRS e-file provider. And so what we've heard about that is that that can be really burdensome or costly to some nonprofits. So just something that we want to make you aware of. 990s are required to be open to public inspection. Guidestar.org is a place where you can find 990s for various organizations. You also need to be prepared to provide it if it's requested by someone. A lot of nonprofits include it on their website. And various entities will look at an organization's 990. It could be a donor or funder, a partner, the general public. So it just gives a lot of financial information about your organization. The other way I always encourage nonprofits to use their 990 is to tell your story. There is a section called Program Accomplishments. on the main form. Yep, program service accomplishments. And that's where you can give a narrative of what you've accomplished throughout the year. And so it's a good place to share everything that you've accomplished over the year. Your board of directors should review this form prior to you filing it. The main form of the 990 includes various summaries of financial information. So if you can scroll back up to the first, yeah. So here you can see the summary of revenue and expense, even activities and governance on this first page. And then you can keep scrolling. Yep. There's also a checklist of required schedules. I think that's the next page. So this is the main form of the 990, but there are a number of schedules that may or may not have to be filled out depending on how you answer these questions. So you want to read through those carefully, and you can keep scrolling, Leslie. There is also, there you go. There is also a section on tax compliance. And if you keep scrolling, there's a governance section. This includes questions about your board, your governing documents, your board committees. And then keep scrolling to section B. Oh, sorry. Go back up. This policy section will ask questions about various policies that you have: whistleblower, document retention and destruction, and compensation policies. It's not wrong if you answer no, but it's just information that they're trying to collect. I will say a lot of the policies that they ask about are good policies for organizations to have. So if you don't have them, look at creating those. We have samples of a lot of these types of policies for organizations. So that's really quick on the 990. We could spend a whole nother couple of weeks going through this. We're not going to go through any of the additional schedules, but just wanted to give you an overview of what it is and what the requirements are.
Really quickly, I think Paula, what was your question in reference? What name are you asking for?
Sí. Gracias. Tú hablaste de un website donde podemos ver las 990 de otras organizaciones. Si pudiesen poner el nombre en el chat, por favor. Gracias.
Yeah, that's guidestar.org. And if somebody on the team doesn't mind popping that in there.
Yeah, it's in there. Mhm.
Thank you.
Okay, Tracy, I'm going to have you go to the annual report.
Sure. So this again is Big Brothers Big Sisters. This is their website. You can see that they have a number of annual reports over the past years. So you will typically find this posted on a nonprofit's website for the general public to be able to view. You want to highlight your accomplishments from the fiscal year. So the 990 is one way to do it, but this is another way where you can do that. You can include financial and programmatic data or information in this report. You can thank your donors and partners through this report. And so you also want to make sure that you just share this with various audiences as appropriate to your organization. Because it's another way to share your story so that the general public and funders understand more about who you are and what you do. In our annual report, we show where our revenue comes from and what it's being spent on, so that they can also see that aspect of the organization. Anything you want to add about this, Dr. Palmer?
Nope. The North Carolina Secretary of State's office also sends out a communication to nonprofit organizations about sharing information from an annual perspective. So just make a note of that, and you can go directly to the Secretary of State's website for that. But you can go ahead to audit and auditor's report.
Sure. So we went through these statements in detail a few minutes ago. The things that I'll say about auditors and the auditing report is that if your board has an audit committee, one of the main responsibilities of that committee is to review this draft audit with your auditors. They also review and recommend a CPA firm and act on any other audit-related matters. Audits are usually conducted annually by an outside accounting firm, and there are different levels of audits or financial reviews depending on the organization's needs. A couple of questions that we've been asked about in previous sessions of the Institute were around Yellow Book or single audits. So I'll just mention briefly that a Yellow Book audit is required for a nonprofit organization if you receive $100,000 or more in grants from federal or state government. And it's called Yellow Book because the auditors will follow the Yellow Book of government auditing standards. So it's typically a little bit more detailed because there are specific requirements that need to be met. The single audit is required if your organization receives federal awards of $750,000 or more during the fiscal year. And that's an audit of both the organization's financial statements and compliance with federal award requirements for programs that are identified as major programs. I have a few tips really quickly for selecting an accounting firm. If your organization does have an audit committee, it is primarily that is the primary responsibility of that committee. You want an accounting firm that has experience and knowledge with tax-exempt charitable organizations. You want to make sure the CPA or the firm is licensed in your state. Ask for reference checks or ask for references to do reference checks with organizations that are similar to your own. Some organizations will use a request for proposals process where you ask audit firms to send you proposals and then you can compare and contrast them to make a good decision about an audit firm. That's all I had on that section, Dr. Palmer.
Okay. I think if we don't have questions, I want to point and team, just pay attention to the chat or any raised hands. The next item on our list is general accounting principles. And that can be found on, let's see, what page? 104. And Tracy, could you just kind of tell us, just give us in essence, kind of how this is helpful to not, and there is a question in the chat team. I think I saw something pop up there.
Yeah, so I'll go ahead and talk about the generally accepted accounting principles, also referred to as GAAP, GAAP. So this is a common set of accounting rules and requirements that's issued by FASB, which is the website that we have pulled up here. That's the Financial Accounting Standards Board. And they're developed to standardize procedures used in the accounting industry. So the purpose is to provide clear, consistent, and comparable information on financials. These accounting practices are required by nonprofits to ensure that financial information is consistently and accurately reported. Dr. Palmer, is it okay if I talk about accrual versus cash?
Yes.
In this section? Okay. Nonprofits can report in different ways. One way is called the accrual method of accounting, and one is called the cash method of accounting. The difference in these two is really about the timing of when you record revenue and expense. So if you're operating on a cash basis, you're going to record revenue and expense when you pay or receive the money. If you're operating under an accrual basis, you're going to record revenue and expense when you get that bill or you create that invoice. So an example related to grants. If you're awarded a grant from a funder and you're on the accrual basis, you're going to record that grant as soon as you get that award notification. If you're on a cash basis type of accounting, you're going to record that grant when you actually get the payment for that grant. So that's the difference between cash and accrual. And Dr. Palmer, I'll let you add anything on GAAP or accounting methods there before we go to our next item.
Right. And then there are also a couple of questions, but I don't know if you want to answer them now or later, Dr. Palmer.
Let me, I'm gonna pull up here. I saw a couple. How many do we have in there?
3 at the moment. 3.
All right. If let's go ahead and address those 3, and then we're gonna kind of move on, Tracy, to closing out this part of our work.
Okay.
So the first question is the yellow book on state of North Carolina or counties offering nonprofits as subcontractors?
So this question is one that I would have to research. I'm not an expert on Yellow Book audits. The center doesn't have to have those because we don't receive that state or federal funding. So if it's okay, team, if we could document that and I can follow up with the answer to that question.
Okay. We'll do that. Can we share recommendations of the timing of the annual audit 990, the annual solicitation, and the annual report?
Yeah, so these are really going to go hand in hand with your fiscal year. So I'll use the example of the July 1 to June 30 fiscal year. We conduct our audit, so that's the fiscal year of the center. We conduct our audit in the fall after our fiscal year ends. The 990, again, is the 5th month by the 15th day. So that would be November. Our annual audit ties directly into our 990. So we make sure we have our audit complete first and approved by our board. And then we use that information to prepare the Form 990. The annual report is also tied to our fiscal year. Again, because we're trying to report on what we did during that time frame. So I would say follow that same timeline. Annual solicitation, are you referring to the charitable solicitation license? I think yes. That is also due, has a certain due date. I think the first one is November 15th, but I think a lot of nonprofits get an extension to January. I can say in order to do that, you either have to also include an annual audit or a copy of your most recent 990, or you have to fill out their financial form that's required. So order, I would say audit, 990, charitable solicitation, and then whatever makes sense for your annual report to be completed during that same time frame.
And I'm sorry.
Okay, go ahead. There's another question.
Just the last third. Well, one, Carla's asking, can we share an example, or can anyone share an example of a single audit they could share? And then Andre might have to be a little clearer on this. He says, I've used both. Is there one that's supposed to be better than the other? The both you're referring to, I'm assuming, is
The yellow
Cash
book.
or
with
accrual.
That's
the
what I was,
single audit.
cash, right, mhm,
I think it's cash or accrual.
Yeah.
Yeah, he just posted that.
right.
There isn't one that's better than the other. I think it really depends on your organization and the makeup of it. When you determine your method of accounting and your fiscal year, you're doing that at inception. Doesn't mean that you can't change it. So it depends. I don't have a clear answer for that. It's going to be specific to each nonprofit organization.
And I think I see some other questions,
Yeah.
Lisa. We'll have to
Right.
put those in our list and respond. But to piggyback on a suggestion and recommendation that Tracy made, if you are paying, and if we could go to gallery view, we can stop sharing now. If you are paying an accounting firm and they are experienced in nonprofit managing and supporting nonprofits related to managing your finances and doing your audits, they should be able to answer your questions as well. So you're paying them to provide a service and to be a resource. And so if they completed your audit, then they should be available to answer any additional questions related to any and all of what we shared, because all of what we shared is in alignment with an audit. We just broke it out into different pieces. So if you are paying them, or if they're doing pro bono, however you are having your audit completed or having your 990 completed, I would highly recommend coordinating what I call a financial management work session with your accounting firm, and literally walk through and ask questions related to this layout that we just gave you, this framework that we just gave you. Send that to them and say, we would like to schedule a financial management work session, and we would like for you to go over these particular items, because they are there to customize what it is that you need for your situation.
Absolutely.
Okay. Thank you, Tracy. And we're going to take a break, and we're going to take a 10-minute break. Lord knows we need it, right? After that, we're going to take a 10-minute break, and then we're going to come back and we're going to focus on fundraising. And you're probably asking yourself, how are we going to cover what we need to cover related to fundraising in the amount of time that we have? Well, we have a strategy for that. So it is now 11:43. So we're going to come back at 11:53. Communication between what's happening as it relates to fundraising and what the needs are as it relates to financial management. So real important for these to be coupled together. What we're going to focus on is I am going to first walk us through what you have in your workbook, walk you through what resources you have in your workbook. In this part of our work, we facilitate 2 breakout sessions, and we facilitate those 2 breakout sessions around prospecting and how to do that, donor prospecting. And then we also focus on that in terms of the framework for fundraising as it relates to the fundraising pyramid. So those are 2 kind of hands-on exercises that we won't do today, but we'll do at the beginning of our session next week. So what I want to do today is I want to again show us what we have in our workbook and help us to kind of understand what these pieces of information are. That's what I call the what. And then we're going to hone in on 2 of what I call the how, as it relates to prospecting and generating prospects, as it relates to donors, and then also understanding the fundraising pyramid and how we use that to frame and operationalize fundraising. So just so you know where we're headed with that. Team, if you could pull up slide 18 for me. And group, if you could go to page, it would be page 106 in English in your workbook. That's where we're going to start. And that's in English. And we're going to start on 107 in Spanish. So if you would go back to slide 18 for me. So if you recall, this is where we began our work as it relates to financial management. It was thinking about the notion of diversifying our revenue and beginning to think about how might that play out for your individual nonprofits, which will be different depending upon your nonprofit. But when we think about this diversification of revenue, we encourage nonprofits to have as a number one way of diversifying revenue as being fundraising. Because we know that if we fundraise and those dollars are unrestricted, then it allows us to respond to the needs more readily of the individuals we serve and the communities that we serve. It's not an easy, right? And it's not an automatic that we can fundraise private dollars for all that we need, but it does need to be a priority in our organizations. And then fee for services, we pointed that out when we looked at this image, that this particular organization does charge a fee for some of its services, and it also has a membership that individuals can be a member. This organization has grants that it receives. It also, to some degree, has some contracts. In particular, some of the government funding that they receive is like grant/contracts type of arrangement. Investments is another entity for some nonprofits that they have investment portfolios where they are able to generate revenue. And then endowments, once an organization has a significant track record in terms of being able to bring those unrestricted dollars in, sometimes those can be shaped into endowments. So we just wanted you to kind of see the opportunities that are there in terms of as you're trying to strategize. If I could turn your attention to your workbook now, as we move into fundraising. So page 106 is where it starts for in English, and it ends page, let me get over there. In English, it ends on page 124, and then in Spanish, it begins on 107 and ends in, I think it's 125. You all correct me if I'm wrong, but I think that's how it shapes out. So what do you have in your workbook? We have some information here to help us to kind of get grounded for our nonprofit of what we mean by fundraising, because that can be different depending upon your nonprofit. If you turn the page, we give just a thumbnail of what fundraising is. If you continue, we give you a reference around some pitfalls that nonprofits sometimes find themselves. And when you get to the next page, you'll see stages of fundraising. In those stages, you can switch the slide team. Those stages of fundraising, this is where we're going to do some hands-on work when at the top of our time on next week. But we're going to walk us through these fundraising stages of identification, cultivation, solicitation, and stewardship. And we're going to work through identification of prospects. This is what when we talk about these fundraising stages, we're talking about donor development, right? And building donors. And so this identifying donor prospects and doing research is where we focus here. And if you look in your workbook, if you kind of turn along with the slide deck, you'll see that we have a stages of fundraising worksheet. And we also have, if you just keep turning your page, prospect identification lists, master prospect list. We're going to be using both of these documents and forms to help us walk through an exercise of identifying prospects and generating a master prospect list. So I just want you to know that that's what we'll be doing there. And then people rules of fundraising, some things to think about when we are inquiring with individuals to give money as donors. If you continue with the next page, a donor bill of rights, that also goes along with this kind of generating and building our donor base. And then if you continue to turn in your workbook, you'll see that we have a page there titled Donor Base that helps us to begin to think about what that is. And then the page that follows that is asking for money. This idea that you only get money if you ask for it. And so it's important for us to have a strategy in place. Now, once we have our donors identified, either existing donors or new donors that we want to approach, we have to cultivate those donors. So moving them from prospects to actual donors, or looking at our existing donors if we want to ask them to do what we call kind of upgrade in their giving, or to give more and to give differently. And then this cultivation, it's necessary to think about a donor base and a database. And we're going to talk about some specific database software platforms that we can use there. And in cultivation, we analyze the giving. Now, if we're a new nonprofit, that may be a little bit more difficult because we don't have a track record and we don't have donors in place. But if you have an existing donors in place, we can do what we call analyze that donor given and come up with some strategies to enhance or to generate some kind of shifting in terms of how and what they give. Communicating with donors is also a part of that cultivation. So just want you to know again what we have here, and then the actual solicitation. So once we do the cultivating, we actually solicit. We make the ask. Once we ask donors to give, we maintain those relationships, and we may even have or create, if we don't already, kind of have our annual giving campaign that we might do each and every year, same time. We're not talking about an event here. You could go ahead to the next slide. We're not talking about an event. We're talking about a campaign, an annual campaign. An annual event is part of the campaign. So we want to kind of go into some detail there when we get together. And then in terms of thinking about stewardship, and once we have received a donation or donations, how do we steward that, those gifts? Either it may be donor recognition, it may be that we're again going back. You can go on to the next slide. We may very well be engaged in some donor acknowledgement, donor recognition, to kind of maintain those donors that are giving and that are supporting us in the work that we're doing by giving a donation. So that's that part. In your workbook, I do believe it's 118, page 118 for English. I think it's 119 for Spanish. Stages of fundraising. So I want to just kind of, again, this is the what. This is the what. When we get together next week, we'll do 2 exercises related to the how. If you look at this worksheet, and just think about these stages. And again, this is about building a donor base. This is about building a donor base and having a base of donors that we are soliciting, yes, each and every year, same time, with some consistency. And we are doing what we call an annual campaign in that regard. So we've got stage 1, identification, how we might go about doing that. Stage 2, cultivation, and what that looks like. Stage 3, solicitation, and what that looks like. And stage 4, stewardship, and what that looks like. Now, also think about, if we could go back to slide, I want to go back to the slide, keep going, where it has all of the stages right there. So we are conveying to each of you this idea of establishing what fundraising looks like for your nonprofit as it relates to donors. And I'm just going to pause there for a minute. As it relates to donors, donors are individuals. So I can be an individual donor. You could be an individual donor. And some of your organizations do have a base of donors already. It is a little different if you're starting at 0 as opposed to already having a established base of donors that have already given. So each of these stages is going to look different depending on if you're asking for a donation from individuals, or if you've segmented your donor base, meaning you might have individual donors, you might have businesses, you might have institutions like educational institutions. It just depends on, one, what that population of donors looks like and is comprised of at the moment, or if you're building the donor base, and where would those donors come from in terms of segmenting your donors. So these fundraising stages have to be built as it relates to each of your nonprofit organizations. So fundraising stages. If you go to page, in English it's 119, I think in Spanish it's 120. Team, if you could go to slide 27. So before we get into the last part of the fundraising work, I want to just mention, when we are in identifying, cultivating, soliciting and or stewarding interactions with our donors, it's important for us to have ways in which we're communicating with donors. And it can be different depending upon who the stakeholders or who the donors are. And so that's something that we want to take into consideration as we are building out each stage. There is a way in which we frame engaging in fundraising, meaning establishing a kind of overarching fundraising program. You can go to the next slide. This pyramid of giving, we're going to work through an exercise with pyramid of giving to help us to better understand what the pyramid is and how to operationalize it. Go ahead beyond 119. We're going to use that page in our exercise. But when you get to page 120, you're going to see pyramid of giving. And there's a theoretical kind of way of operational. I say that because it looks different for each and every organization that we work with. in terms of nonprofits. But there is the annual giving, the major giving, and estate giving. And again, this is page 120 in your workbook in English and 121 in Spanish. There are these three different kind of ways of thinking about giving. The way the pyramid concept works is that if we build a really robust annual giving infrastructure, then we're able to move up the pyramid and able to create and put into place strategies for major giving and estate giving. But the goal is to build the foundation and to build this annual giving apparatus infrastructure, and then we can kind of grow from there. When you look at the page that follows, it gives you a description of each one of these. And the next two pages actually gives you a description, one of annual giving, major giving, and estate giving. And it also gives us some examples of what that looks like. We're going to use this information to work through our activity when we get together. The other thing I want to point out, page 123 in English and 124 in Spanish. Here is an emphasis on the concept. And again, the annual giving, the intent and the focus should be to establish, I'm going to say, a robust and effective annual giving apparatus, whatever that looks like for your nonprofit. And we're going to talk about some particulars of that when we get together. You can go on to the next slide. We've talked about some fund development strategies already. Grant writing, most of us are familiar with that. Earned revenue when we're charging a fee for a service, or in some organizations, individuals might have space that they rent. There are all different ways that some nonprofits are able to earn revenue. And then this social entrepreneurship is a concept where we as nonprofit organizations partner with or collaborate with for-profit entities in some cases to address a particular issue or concern. And I'm going to go over some examples with you related to that. So I want you to know that that is coming. And then in your workbook, if you go to page 124 in English and 125 in Spanish, there's a list of characteristics of a successful fundraiser, and we could add, right, more to this list. But when you're thinking about a fundraiser, and some of you may be fortunate enough to hire a person who does development or fundraising for you, some organizations are not, but these are some characteristics that you would want to look for or think about. Whether or not you're hiring a person on your staff or contracting with the organization to provide this support to you, may be an option for you. I was looking at the Spectrum News channel earlier this morning, and there's an organization in the Triangle. I think it was called 100 Black Men of the Triangle. And they announced that they had received a $40,000 grant to help them build their capacity in the area of development and in the area of really fundraising. And that this group has never had a paid staff person. And so these resources that they were able to acquire, and I don't remember who the funder was, the resources they were able to acquire was for that purpose. So there are some funders, in particular foundations, that are open to funding, setting up helping you set up a fundraising administratively fundraising mechanism for your organization. You can go to the next slide, team, because here's what I'm talking about. Where are the human resources for fund development? Where are the human resources for fund development? Some of us, our nonprofits, we're fortunate enough to have paid staff. Some of us have volunteers that help us with our fund development work. Some of us, our board of directors, are very involved in helping to fundraise. And then some organizations are fortunate enough to have consultants. And I was pleased to see that this, again, I think it was 100 Black men of the Triangle, they were able to secure some capacity building dollars to help them to be able to build out an infrastructure where they could put some attention to fundraising and fund development. So, but in terms of the what, this is what you have in your workbook. And if you would go ahead and flag for when we get together next week, go ahead and flag pages 111, 112. This is English. 111, 112, and let me get back over here. And 119. So 111, 112, and 119. Those are the tools that we're going to use to do our applied kind of practice as it relates to fundraising. And in Spanish, it's 112, 113, 120. Those are the pages that we're the areas or the work that we're going to do next week when we get together. And this is where we're going to start. So when we get together, we're going to jump right into this work on next week. I want to go back to the gallery, team, and just kind of get a temperature gauge. So again, what I wanted to do is give you the what. This is what you have. And then we're going to hone in on two elements of what I call the how. We're going to hone in on those two parts of our work at the top of our time when we get together next week. I don't think I did this with financial management, but I do want to do this with fundraising. Where are we with the what? Are we good with that part of where we are, knowing that we're going to do some hands-on work next week? I see some thumbs up. I see some hand claps. And team, if I'm going to take the opportunity to, as you think about fundraising, if there is an immediate kind of question that you have on your mind right now as it relates to fundraising, could you go ahead and put that in the chat? And team, if we could capture that in preparation for where we begin on next week. So if there's a question or maybe a thought or maybe I'll just say query in your thoughts right now about fundraising, if you would go ahead and put that in the chat, and that way I can reference the team and I can reference that as we prepare for our next week's session. I'm looking at a couple of the questions and we are ready for you. That is a part of our material. So I think we'll be in good shape there. Give me a sense of where we are today. How are we closing out before I pass it over to the team to give us some instructions about graduation. Graduation is next week. So, and thank you for your questions. That'll help us frame our work next week for
Yeah, there's a lot coming in, so we'll
Okay.
I can't, as soon as I read it, another one
You
pops in.
can't keep up,
I
right?
can't, so this is good.
We got you though. We
Yeah.
got you.
Am I reading this right? Are we congratulating someone that got some funding?
Ooh.
That's what I'm trying, I say it was popping
Oh,
in
you
so
saw
quick.
it comes up so quick. You can't.
Yeah, I'm trying to, who was that?
I was just sharing the announcement that Dr. Palmer mentioned about the
Oh,
100
okay.
Black men of the triangle, and they got
Okay.
where they got their funding from. In case
Okay.
people were curious. Yep.
Thank you.
Rebecca,
Yep.
who did they get those dollars from? Do you know?
The State Employee Credit Union Foundation. Yep.
Mhm.
Take
That's a
note,
good,
everybody.
that's a good lead, y'all. That's a good lead. That's a real good lead. I see you, Leslie Covington. I see you. Give me a sense of where we are today. Financial management and fundraising. Lisa, you see, I don't see any reactions.
I think
I thoroughly enjoyed the session today. I've enjoyed all sessions, don't get me wrong. But I think the presentation earlier with Tracy and team, and I think just the content, I think we're all right here. We live in this space every day. And the breakout session even earlier with April and diversifying funding and how, you know, her position is funded with the city. And I just love the session today. I have lots of notes. I'll probably follow up with several people as well, but I hate to hear that next week is our last session.
oh,
Thank you all.
Leslie, I see your hand up. Covington.
Yes, I'm the same way. I do hate to see it end. I'm like, wait a minute, I think I need a dose of this, at least want some more. But today was very meaningful for me because the Caring Place is trying to move up the pyramid of giving. So it helps to conceptualize it and actually see it instead of hearing a consultant talk about it or hearing other people talk about it. It's so great to see. And with how you move from just your general annual giving to the capital campaign, which is what we're trying to do, is build. It's so helpful. So today is very meaningful for me. We're trying to choose a consultant for that. And so I'm sitting here going, I got a response from sort of a request for yesterday. And so it's helping me think through what they said and if we want to go with them or not. So this is just so helpful. Thank you.
good. I think I've sat through the Institute, my 6th time maybe, and each time I sit through, I too learn something new. But I think when you look back through all the sessions, you can't look at each session in isolation. You just see how it all just comes together, from strategic planning to your board governance. It all ties into this one big puzzle. So when we tell folks, when you're taking these 3-hour courses, think about everything else you've learned already, making as you go forward with your planning. So yeah, I agree with you. I enjoyed each time I sit through. Of course, Dr. Palmer's great with her instruction.
Oh,
I think folks are just taking it in right now, Dr. Palmer.
okay. And we know that I'll say there's a wealth of information, right? And we know that there is quite a bit to digest. And not only that, to understand and then to implement. It is important to craft a plan, right? As to how you might move in a direction that gets you where you would like to be as it relates to all of the management functions. And they are interconnected. And, but give yourself, be patient with yourself, and with your board and with your staff and with your nonprofit in general. It takes time to move and shift and adjust and pivot and do all the things around the organizational capacity building It takes time to do that, while at the same time you're implementing programs and delivering services and helping people and changing your community. And thinking about that and coming up with kind of the master plan, if you will, is a wise thing to do. And so thank you all who shared kind of where you are with what we've worked on so far. Thank you for sharing. And team, I'm going to pass it over to you to talk about, to close us out.
Thank you, Dr. Palmer. Let's go to, and thanks everyone for tracking all these questions and also positive feedback in the chat. It's really helpful. I've made track a record of questions that are still lingering, and we'll figure out a way to address those between Tracy's help and Dr. Palmer and our team here. Did want to cover some brief updates regarding graduation prep for next week. We will be closing out fundraising next week. We will touch on human resources as our final topic. And then we will also have our graduation. It usually takes about the last half hour of our session. Hope you all can stay on for it. It's a really special time for everyone to gather together and to celebrate this great accomplishment. The one thing that I'll mention to you is you're going to get an email invitation from a company called Montage, and they're based in Canada, but they allow us to have you all record very short videos with some prompt questions. Just pick one that speaks to you, that you'd like to answer to. You want to make sure that you know, your video is working well and the sound is coming through, so no background distractions. To just record a brief sort of message to your fellow classmates. Like I said, we'll have some prompts for you. That's completely optional. We compile those together to show to you as a graduation video at the end of our graduation ceremony. We also will have some Zoom backgrounds to celebrate the occasion that will provide you with the links for those in the wraparound email today, and instructions for how to download those and add them to your background for the graduation part. You could do it for the whole session if you'd like to have it just there and know that it's set up, but it's a fun way for us to all gather and celebrate that. We will be, if your mailing address has changed since the beginning of class, wherever we sent your workbook to you, the mailing address that you gave us for that is the one that we'll use to send you your certificate of completion for this institute, as well as your class photo, a copy of class photo. We'll take a snapshot of our gallery mode screen and compile those into a nice graduation photo that you can have up in your office and remember all of your cohort members and whatnot. And if you haven't joined the Facebook group page, I recommend that you do if you'd like to, because it's a great way to stay connected. And some of the questions that we had, for instance, you know, does anyone have a single audit that they could share? Well, that's a great place to upload that, right? Or to ask that question in the Facebook group page. So feel free to join that. I'll provide another link in the wraparound this week to remind you to join that if you'd like to. And then next week, we'll also be providing some more instructions regarding the Duke Nonprofit Management Certificate credits. That's a separate certificate from what we provide you from the center. If you're working on your Duke Nonprofit Management Certificate, you can apply credits from this institute that you've completed towards that certificate for an additional fee. So we'll be giving you instructions for how you go about that. We've simplified the process, I think, so it's a lot easier for you to go ahead and apply for those credits. So I think that's it for graduation prep. We'll go to the last screen here. Oh, a question about sending updated mailing address. If you need to send your updated mailing address, I'm going to put my email address in the chat, and just feel free to send that my way. rbecnonprofit.org. Your mailing address has changed. Please just send me a quick email and let me know that, and I'll update our records before we get those out. And then we'll provide the link here in the chat for our today's session evaluation, which we love to have you complete. Thanks to those of you who have been putting time toward completing those. And then, yeah, we'll be in touch with the wraparound from this week, giving you instructions for next week's closing session. And we're looking forward to seeing y'all next week for our last one. It's hard to believe.
Yep, sure is.
Thanks, everyone. And thanks, Dr. Palmer and our interpreters. We really enjoyed having
Yes.
you, and we thank you for all your help.
Thank you.
Thanks, everyone. Take care.
Staff, if you wouldn't mind staying on, Dr. Palmer.